This is the most successful ETF launch of all time. I mean, we've never seen anything like this, and it's only really just started. I don't know, Dan, what do you think?
Not even the beginning of the beginning. I mean, you have trillions of dollars that now have a one button push.
These guys are not traders in the whole. These RIA networks generally talk to their clients about, you should think about an X% allocation. They put an X% allocation, or they mandate it and say, hey, we're going to do this for you guys. They do it. And then what happens is, Dan and I have seen this all the way through with friends of ours. They start with 1%, and then before you know it, they get up to 5%. And they're like, fuck it, we're going to 10%, because they start to understand the power of this thing.
The spot Bitcoin ETFs have now officially traded for 2 full months, and their performance has been nothing but magnificent and awe-inspiring. According to the latest update by senior Bloomberg ETF analyst Eric Balchunas, the ETFs now have over $55 billion in assets, and double that in volume at $110 billion. In his post, Eric noted how significant this milestone is for ETFs that have been trading for only 2 months. If these were the numbers at the end of the year, I'd call them a success, he noted in a post on social media platform X. To do it in 8 weeks is simply absurd. In an article published on Monday, the Bloomberg ETF analyst also noted that conquering gold ETFs is too easy a feat for the Bitcoin ETFs. This is no news because we are already more than halfway to overtaking gold ETFs in just 2 months. Eric added that the spot Bitcoin ETFs are now up against much bigger categories. A section of the article that he shared on X reads, US spot Bitcoin ETFs will likely find gold too easy to conquer and eventually seek to overtake bigger categories in sectors and smart beta. In their first 2 months, the 10 ETFs have almost doubled assets to $55 billion and traded over $110 billion in value. This puts them on a pace to pass gold ETFs in size in a few months rather than years. While Eric is celebrating the success of the spot Bitcoin ETFs from BlackRock and others, Real Vision founder and CEO Raoul and Dan Tapiero, the founder, managing partner, and CEO at 10T Holdings, believe there is so much more to look forward to from the Bitcoin ETFs. In Tapiero's words, this is not even the beginning of the beginning. As we bring you clips from their recent interview with Crypto Banter, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
There's 8 trillion in these RIAs. That's all that's happening really right now is RIAs. Now, you've got to understand how these RIAs work, and Dan knows them because a whole bunch of investors in his fund. These guys are networks. They're not like brokers get on the phone like buy, sell. They go and have a steak dinner with their best client who talks about this Bitcoin ETF. They're like, I'm not sure. They read Barron's that week. They're like, I'm not sure if it's the right thing to do. They then go and play golf. Their other client talks about it. And eventually, you know, this huge property developer from Cincinnati then sticks in, you know, $5 million into the ETF. This is the process. So it's actually really slow. And we've only just started. And a lot of these people are driven by price.
That's what you said.
If you look at NVIDIA, you see how price feeds on itself. It becomes reflexive. So we've just started. These guys are not traders in the whole. These RIA networks generally talk to their clients about, you should think about an X% allocation. They put an X% allocation, or they mandate it and say, hey, we're going to do this for you guys. They do it. And then what happens is, Dan and I have seen this all the way through with friends of ours. They start with 1%. And then before you know it, they get up to 5%. And they're like, fuck it, we're going to 10%, because they start to understand the power of this thing. So it becomes very reflexive in price action. You know, I've seen family offices. I've got one of the investors in my fund is a big Australian family office. At first, their allocation was 1%. They probably got up to 20% in crypto allocations in the end, because you know, once the principal started to understand it, that it just keeps building on itself, and the price action just builds on it. So we've, as Dan said, we're really, really early still.
I would say that also many people, you know, will do a dollar cost average. So this is, someone will say, okay, I'm going to 3%, and they do 0.5% every quarter for the next, you know, few quarters. So I think there are a lot of people who purchase things like that. No one is, no. Very few people just come in and say, okay, put 5 million in. It's an all-time high. I don't care. A lot of those guys will do, so I think that you have to expect that there's a tail to many of these purchases that Raoul's talking about.
And then there's also these massive platform models like BlackRock, Fidelity, Morgan Stanley, JP Morgan, that suddenly add it to their asset allocation mix. And those guys control like $1 trillion of assets. So once they do it, it's the same process. It then starts dollar cost averaging in. And, we've seen BlackRock talking about doing that. I don't think it's even started yet. So those massive pools of capital start coming in as well. And we're not talking institutions. None of the institutions are in yet, really. Also, don't forget, the 401k bid in America is another big thing. One of the reasons passive funds have outperformed active portfolios, like the NASDAQ and the S&P, keeps outperforming, is because millennials, every 2 weeks, add to their 401k of this stuff. They can now add Bitcoin into their 401ks. So that becomes a every 2 week bid that goes in perpetuity forever. Now, it doesn't mean it can't go up and down, with the business cycle, but it's a very big structural change that people don't really understand.
During the discussion, Tapiero and Pal discussed other factors that will make this cycle a very bullish one for all cryptocurrencies. As Pal has stated in previous interviews, this is both macro and crypto summer. 2024 is also an election year in the United States, which means rate cuts and other quantitative easing measures to incentivize voters. In addition, other central banks are already printing or very close to printing. The US Federal Reserve itself cannot be far off. These factors have been known to be very bullish for the markets, even more so on the cryptocurrency market, which is popular for its volatility. So, Bitcoin trading above $72,000 for the first time in its history is probably just the tip of the iceberg, coming in 2024 and 2025. Let's get back to the interview.
I've been calling for, since Q1, since Q4 22, I thought the low was in. I was pretty loud about it on Twitter and at conferences, and the first half of 23, I was super bullish, and so I think that this is one of many very bullish factors. We haven't even had the halving yet, right? That's another thing. We haven't even had a supportive macro backdrop yet. So the Fed hasn't even cut yet, and what you could have said to me was, if the Fed funds rate is at 5%, do you think Bitcoin will be at 70,000? I would have thought, well, it probably needs to wait a little bit, right? The Bitcoin price could wait a little bit for some Fed action. So there's no waiting because the market knows that inflation is slowing, and the Fed is just lagging that cycle. And that's what I would say for me as a macro guy, that's what's a little surprising. Not that we're here, but one of the main drivers hasn't even kicked in yet. We could also talk about the Ethereum ETF, which I think is definitely going to happen, and that hasn't even kicked in yet. There are a lot of bullish fundamental things out there.
You've got to understand that a 5% interest rate is not a hurdle to an asset that goes up 100% a year on average, right? It's irrelevant. But liquidity drives assets. So liquidity did pick up, but as Dan's rightly said, the game is only just started in the liquidity cycle. At the end of this, the Chinese are in the middle of pretty much a debt deflation. They're going to print money, serious amounts of it. The Fed are going to cut, the Europeans are going to cut, the Fed are probably going to end up bailing out a few banks. The whole game is to be played. We've got an election to bribe voters with. There's usually, straight after the election, there's usually a fiscal stimulus. Let's say Trump gets in, he'll probably do a stimulus. There is money to be handed out all over the place. So what is surprising is, we had a very strong run even before the halving. It's early in the macro season, but it is what it is. Cycle to me is driven by the macro. That macro cycle has been the 3.5 year, 4 year cycle, and it's the same cycle in all assets. So I don't see any reason the cycle would change unless we create some sort of weird monster bubble in crypto or we just got a very strong cycle on our hands. Some cycles are stronger than others. And the last cycle, I thought cut short. I thought there should have been a next leg higher. I thought it should have got to 100, and it didn't. And I think people have PTSD from that. And so I think they're fearful of screwing it up again and getting too bullish. And I actually think there's actually more of a fear of something like 2013, where it kind of had a dip. Everyone thinks it's over, and then it went up like another 4x, something stupid. I think the bubble cycle's actually maybe a higher probability now than this left translated. When I talk to people about the left translated, when you ask them, it's just PTSD.
How long is this macro cycle going to last, in your view? Give me your views on the macro cycle.
From the everything code work that I've done, that I've talked extensively about, it should be normally it's right towards the very end of 2025. Now, could it be a little bit earlier? But normally the crypto cycle ends in November, December every time.
According to Pal and Tapiero, this is the biggest macro trade of our lives. Not only is this the year trillions of dollars finally get access to Bitcoin, but it is also a halving year, and most importantly, it marks the end of the Fed's quantitative tightening and the beginning of a massive macro and crypto summer. All roads lead to more cowbell for the US government before elections in November. Please share your thoughts on Raoul Pal's and Dan Tapiero's predictions and outlook for Bitcoin and the entire digital asset space in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.